Good evening, ladies and gentlemen. I am Dan Theok, and I'd like to welcome you to our weekly investor forum. Today we have our very special guest, Mr. Alexander Melville, Managing Director of Tropical Battery Company Limited, and of course our panelist, CEO Gary Parrott. Welcome, guys. Apologies for Chairman Berry, who won't be able to join us this week. Before we go into our investor briefings discussion, we encourage viewers to post their questions on social media and remember to tag us with the hashtag #MILInvestorForum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a market segment on foreign exchange, so be sure to stick around until the end of the program. Tropical Battery Company Limited was founded in 1950 by Tex Williams as a manufacturer of lead-acid storage batteries. It was then acquired by John Melville in 1967. Tropical Battery is now a major distributor of energy storage. In the 90s, it changed its core operation to the distribution of automotive batteries, its own car brake fluid, as well as several automotive consumer product brands. The company currently exports more than 1 million metric tons of spent batteries each year, earning valuable US dollars. Tropical Battery has 6 branches located across Jamaica in the major cities and towns, the newest being the Ferry retail store and head office situated in Kingston. The company also has approximately 1,000 resellers. That's correct, 1,000.
Yes.
The company is currently focused on partnership deals and strategic acquisitions in Jamaica and across the Caribbean region. The company was listed to the junior stock market on September 28, 2020. I'd like to take this moment to remind you that if you're investing or looking to expand your portfolio or even embark on your first investment journey, Mayberry Investments can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Our social media handles should pop up somewhere on the screen just now. Now let's introduce our very special guest of this evening. As I said before, it's none other than Alexander Melville. So Tropical Battery, it's a subsidiary of Diverse Assets, Inc., where Alexander assumes the role of chairman and managing director. He's also the current managing director of Diverse Properties and the treasury director for Checker Group. Alexander's experience in the business world is diverse, to say the least, with at least 25 years experience in the tourism industry. He also has 25 years experience in real estate and in the automotive battery and energy storage business, and 10 years in the gaming industry. Let me take a good look at Xander. You don't look that old, Xander.
No, they run consecutively.
He currently sits on the board of Epley Limited, a publicly traded finance and investment company on the Jamaica Stock Exchange, and on the Audit and Remuneration Committee of that company. Today, Alexander will be giving us an investor update on Tropical Battery Company Limited. Welcome, Alexander, to the program.
Thank you, and honored to be here.
Thanks, and welcome, Gary. Thanks so much for being here. Before we jump into the questions, I would like to do a quick analyst review of Tropical Battery to set some context, and then we can jump into the questions, if that's okay with you, Xander?
Yeah, great.
So, folks, if you put up on the screen for me, I think we have an analysis of Tropical Battery. First analysis is just to take a look at how the stock has traded. Remember, this IPO came out at $1, and the stock has traded so far up to a high of $1.28, and currently trades at about $1.13. Based on the 12-month trailing earnings of about $33 million, this represents a PE ratio of 44 times, which is a little bit high relative to the junior market average of 24, but I will note that in that $33 million trailing earnings, there's a $25 million one-off write-off of taxes. So I think if you were to tax adjust that, the adjusted PE would be about 24 times, spot on with the junior market average. On the next slide, I'd like to just look a little bit at the actual performance. Here they've chosen to highlight for me the last quarter. The quarter ended December. Of course, Tropical has a September year-end balance, and they grew their sales by 7% for the full year end, and albeit did have some challenges with the profit, they turned a $29 million profit because of that $25 million one-time tax write-off that I mentioned. So I like to think of the adjusted profit as 29 plus 25, which is about $55 million. But just looking at the quarterly results here, what we'll see here is in this last quarter ended, I guess, COVID pressure. Back to the original slide, you can see in that last quarter sales are down by about 9% on the previous slide, guys. Still going through that previous slide. Sales for the quarter are down by about 9%, but operating profit is up 26% at $19 million compared to the prior profit of $15 million after tax. So here we see the benefit of being listed on the junior market with no corporate taxes kicking in. So long and short is, although sales were down by 9% for the quarter, profit for that quarter was actually up quite a bit, 19 million versus $15 million. That's not quite 26%, I don't believe, but that's what I see there. So highlights for $50 million of revenues, operating profit of about $32 million, total assets of $1.58 billion, and a market cap, I think in the previous slide we said the market cap was 1.4 billion, so it's trading at a price to book of about 1 times, which is pretty conservative, all things considered, and they have strong shareholders' equity of $754 million. Moving on to the next slide, you can see the profits by quarter. So whilst the profit for this last quarter was down to $29 million, if you sort of look at the seasonality of it, it's still up vis-a-vis the quarter for the first quarter for last year, where they had 19.92 million. But in general, we see pretty good earnings, and I hope as we move forward, we'll see those earnings continue to grow. So moving on to the questions. So Xander, in a nutshell, that's an analyst perspective of the company. I personally like Tropical Battery quite a bit, bought quite a bit at the IPO at $1, and I certainly expect to see it growing a bit more. But jumping into our questions, in a market where the barriers to entry are considered generally to be low, how does Tropical Battery differentiate itself apart from its competitors?
Yeah, great question. Again, thanks for inviting me and to give an update, and really just excited to be here and share what's happening. How we differentiate ourselves is effectively, we have 70 years experience in the business, so we have technical expertise from the manufacturing perspective. So I think we are the only company in Jamaica that I know of that has any manufacturing background. So technical expertise when you're dealing with an electrical item is important. So I think that's one of the ways we separate ourselves from competition. Secondly, is our distribution network. As you mentioned earlier, we have over 1,000 dealers. Yeah. So every small gas station, auto parts store around the island, batteries are a distress item. So when you need a battery, you need one now. Yep. So generally, so we, if there's a gas station in Mandeville, anywhere, we have can have great touch points for you to buy those products. Additionally, we pride ourselves in a lot of customer service, and it really is our team across the group, even in tourism to automotive. If you look online at our Google reviews, I mean, these are just hundreds of reviews who come in and say, oh, they had, experienced great customer service with our brand and at our retail stores and generally with the product. Of course, every once in a while you have, some persons who we don't meet their expectations, but in general, we're 4 or 5 stars out of 5 stars at our locations if you look online. So I think customer service, the breadth of our distribution network, the quality, and lastly, I would say the range that we carry from little pen light batteries all the way up to boat, train, truck, crane batteries, just incredible diversity of range, and that I think helps. Absolutely,
and I can certainly testify to the customer service, not connected to Xander. I bought 3 batteries last year across our 4 cars. And I remember, Xander, you may remember this, my wife obviously bought a battery for, I want to say $15,000, but they swiped a credit card for $150,000. And I didn't discover it until 2 months later, and I sent an email, and I got my refund like in 3 days. I was like amazed. So great service. I certainly love it, love the product. Yeah. Moving on to our next question. On average, what percentage of the company's revenue is derived from battery sales, tires, accessories, and from battery exports?
Currently, it's about 80% battery sales, so we are definitely focused on, and I want to broaden the area from batteries to energy storage.
Yep, yep.
Because we do a lot of, we're bringing a lot of new lines as well. So in the renewable energy space, lithium-ion batteries, not just lead-acid batteries.
Right, right.
So that's about 80% of our sales. Right, currently it's only about 3% in tires, which is a new product that we're kind of really getting into, which we can mention a little bit more on later. And accessories is about 10%, and export is about 7%. And so we're very proud of the export line. Not only is it environmentally friendly, because we're cleaning up, you know, taking up all the batteries and shrink wrapping and palletizing them and exporting them to licensed recyclers across the region, and it has been a huge foreign exchange earner for us as well. And it's just good for the environment, it's good for business as well.
And when you say export, you don't mean just your own batteries, right?
Yeah, we collect everyone. Even our competitors' batteries, we will pick them up, once they're in reasonable shape and send them out to be recycled.
And you're perhaps the only one doing this?
I'm sure there may be one or two other persons collecting batteries. I don't know any of our competitors who actually do this.
Right.
But there's certain people in the metal export space that do lead, steel out there, and they also send out batteries.
Right,
but in terms of in the actual selling, I don't know of any other ones right now.
Excellent. That's pretty impressive. And then third question, during the pandemic, Tropical Battery launched the doorstep delivery option. Has that been a significant amount has there been a significant amount of customers utilizing this option? And how much did sales grow as a result of this new delivery option?
Yeah, good question. Yes, it has grown. I wouldn't say significantly because it's not material yet, but we do have in Kingston, Montego Bay, Ocho-Rios, Mandeville, wherever we have retail stores within those towns and cities, we do home delivery, and the customer experience has been incredible because many times persons are, hard to, when their car breaks down on the road or when they wake up in the morning, they're leaving their home, they need to get going and to get someone to run and get a battery and come back and a jump start and all of that. And of course with COVID, sometimes people just don't want to go into a retail store with 5 or 10 other people and expose themselves. It's better to have one person come to your home or wherever the car's broken down. And we do that. So it's growing massively, but I wouldn't say significant. It's probably maybe about 3% of our sales, but we are going to continue this push because the customer experience has been so incredible, and the feedback we've had, letters written to us from persons say, we were stranded and you came to us instead of them having to figure out a way to come to us. We came to them, and it was just a beautiful experience and something we want to continue and push, and it's growing. So very happy about that.
Great. I'm sure one of the 3 batteries I bought last year, we used that service. Could be 2, I can't remember, but certainly on one of the occasions. Gary, you've been quiet. Any questions from your perspective?
I have a lot of questions. I was actually impressed when Xander used the term energy storage, not just batteries. So the 2 questions I have at this point for Xander is, COVID will pass. How are you going to cope with the logistics challenge of that increase in demand for your batteries? Because, so many people are now shut down. And the second question is this electric revolution in terms of the motor industry, is it going to be positive or negative for the company?
Great 2 questions. Thanks. Yes, so let me take the latter first. The whole electric shift to EVs and those type of cars is going to be very positive for us. All EVs on the current market, including Teslas, everything, they use 2 batteries. One battery that runs the car and actually replaces the engine, the combustion engine. The second battery is a same battery that we sell, conventional battery that starts the car, runs the radio, the lights, all the ancillary stuff in the car, windshield wipers. They don't, so it's beautiful, and actually some of them use even 2 or 3 batteries to replace not only the combustion engine, but just different electronics running on the car. and so yes, that's going to be net positive for us. We were at first concerned about that, how does that all work? But it's definitely going to be positive for us. And the first question, wow, remind me again, Gary. Sorry, I lost my.
Yeah, so I would assume that your sales are impacted by COVID, etc. The general reduction in transport. But as COVID goes away, I expect, the whole people coming out of cabin fever or having cabin fever, the increase in demand. How are you going to deal with the logistics of that? We're hearing issues about freight, etc., etc.
Yeah, absolutely. Beautiful thing is we just built a brand new warehouse, which is double the size of our capacity that we had, which is out by ferry. We have been ordering up, and a part of our whole transition and our journey, Gary, from being a family business, as you can see with my grandfather, brothers, to being now a publicly traded. Actually, we had private equity first in there in the middle, and then now publicly traded, and we're going to do the same with all of our companies within our group. Is this making sure we raised money in that IPO? That money we are investing in inventory to make sure that we are ready for the boost in demand that we see coming. Our sales were down probably 10-15% from the tourism hospitality sector, and we see in the second half of the year, due to the taxi operators, the rent-a-cars, buying back batteries and really getting back going. And even the farmers that sell produce to the hotels, many of them have not geared back up, buying batteries for their tractors and their pickups and all that kind of stuff, because they've been impacted by tourism. So there's a huge demand coming. What we've done, we've ensured that we utilize the money we raised in the IPO. We've invested it in inventory, one, and two, we've actually increased the number of suppliers that we buy from, because we've had shipment and delays with the whole, related to COVID, and also just in general, shipping is going through just hiccups because of world demand and moving vaccines around. I don't know, there's just a lot of delays in shipping, and 90% of them related to COVID. But so we've ordered from new suppliers, and also ordered up to stock up our new warehouse. And I think that will make the second half of this year incredible in terms of growth that we see.
Yeah, appreciate that, Xander. It's interesting to note so that you too were impacted by the tourism sector, and I'll be honest, that wasn't obvious to me at first before we spoke earlier, and so that's another thing I think to look forward to, because we really do expect that tourism, and again, you have 25 years experience in tourism, and we had a program last week on tourism as well too. But what's your general outlook in that regard? Tourism coming back, how is that going to impact? Whether it's tropical, you said maybe 10 to 15%, or perhaps even Chukka, where you guys have even more direct exposure to tourism. What's your general feeling about tourism, the timing, and coming back in general?
So my thoughts on it are the great brands are going to survive and going to come out better. So if you've built a good brand coming into COVID, whether it's Chukka Caribbean or Sandals or any other great brand built in Jamaica and overseas, we have been investing in technology and investing in making the business more efficient while we had this kind of pause in revenue. And so it's been very challenging. It's been very challenging for all of our staff. It's been very challenging for a lot of people. And as I said, thank God, Tropical was only impacted maybe 10-15%. But they went to zero for many months, zero revenue, which is very challenging. But again, I think we have used that 1 year period to kind of ramp up back the business, think about it differently, go to market in a different way. And I would say the number one thing I see, we're using technology to automatically check in persons, sign e-waivers, a bunch of things that are completely, we wanted to do before but never had the time to do.
Right.
And so we see now, I think occupancies a couple of months ago were maybe 20% of last year. Now they're ramping up to 30-40% of last year. And so we predict or we model out that, if there's no other major COVID breakouts, we feel that by summer to the end of the year, we're going to be back more, 70, 80, 90% of kind of where we were in terms of our business in tourism. And that, I think, is probably similar to most. And I think that, so the outlook is really strong for the companies that have built good brands.
Right.
Some of the smaller companies have had challenges, or even have small companies with good brands, they'll be fine, but some that have not, or not have a recognizable brand, they've been having a lot of challenges with financing, and keeping their working capital and keeping their business going. It's even been challenging for us, and we're a middle-sized company, in that space. But we've been able to, to make it through, and so we're very positive. I'm excited about the second half of the year, given that, we're still, yes, sales are a little bit down this first quarter, but this second quarter, sales are going to be up on this March quarter, are going to be up. Profit should be up, and we see a momentum carrying into the second half of the year that should be, positive for both tourism and tropical.
So we could see a lot of the rent-a-car companies coming back to tropical battery.
Yes.
A lot of the rent-a-car companies and the farmers, as you said, having to.
A lot of those cars are parked.
Yes.
And lots of them are parked, and batteries are dead in them, and only waiting now for tourism to come. And they buy a lot from us usually in December and January. Which was awful this year, December and January, because they just didn't buy any.
Right.
They usually gear up for the tourism season in November, December, and then that's when we get big supplies from them, and actually agriculture.
Okay,
as well.
So we look forward to that.
Yeah.
The company is expecting growth in earnings due to expansion into the distribution of tire brands, Hankook and Laufen, as well as additions to its existing bike and car battery line. How much do you see revenue growing by with the introduction of these products?
Yeah, good question. I think as it relates to tires, I believe tires is probably it's about 3% of our sales now. We predict by 2023, it'll be more like 5 to 6% of our sales, which should be around probably 100 to 150 million in revenue additional to where we are now. I see revenue from our other sides actually growing a bit more, probably around 12 to 15% on last year gross top line sales.
Right.
And I think we'll move the bottom line from maybe 3 cents per share to somewhere between 7 and 10 cents per share at the end of this fiscal year.
Right.
Once we don't have any major hiccups between now and the end of the year with COVID. But we're confident we've sorted out our logistics and shipping and inventory hiccups that happened because of COVID.
Right.
And now those measures are going to produce some fruit in the second half of the year, and actually have started already in this second quarter, January to March for us.
Right. Okay, excellent. I know in that regard, you guys have added a brand new head office, a retail store, and a warehouse.
Yeah.
How is that also helping to impact the business? I think you hinted at it a little bit, but could you speak to that a little bit?
Yeah, sure. As you can see from our numbers, our operating expenses are pretty much down, and a lot of it is related to that new facility. We had consolidated 2 warehouses in Kingston that were on Ashenheim Road, and charging facilities, because we charge all of the batteries before they go out to make sure that they're topped up, and even if you have to rotate, it's one of our competitive advantages as well. I don't know any of our competitors that has the kind of charging facility that we have. This new building is fully solar, so our light bill has gone from, X million to a reduction of probably 50 to 60% reduction on our light bill.
Wow.
So we're seeing efficiencies by moving to solar, and eventually we're also going to put in battery backup, but we did the first phase just solar, so we're both, solar and the grid.
Right.
But I believe that we're going to put in a battery backup system as well, and maybe come off the grid fully. We'll see in time, but that's for maybe 2022. So the efficiencies of this brand new building and putting everybody under one roof has been, absolutely amazing. The energy of the team and the staff, when everybody comes in, we're all under one roof instead of separated into 2 buildings and driving forklifts across the road and 2 security guards with 2 different buildings, Ashenheim Road. everybody is under one roof, and it's just a beautiful energy of being in this new space, and it's like home. It's literally like, you know, your second home, and it's beautiful to see the team just, you know, work so well together in that space, and again, we're gaining efficiencies from it, which impact our bottom line, because the building is just that much more efficient. And the last point I'd make about moving out there is to move to Ferry. We distribute 70% of our sales or distribution, well, maybe 65, 70%. The other 35% or 30, 35% are retail through our 6 stores. So a lot of our business, we have trucks, you know, heading out of Kingston to Mandeville, Mobay, every day, every week, you know. So lots of different delivery business. And this being at that location, I mean, this is incredible. Location, it's just has cut our fuel costs, has cut our maintenance costs, because they're no longer driving around Kingston and stopping and turning and going around to get to Mobay and dealing with the traffic. You just boom, leave you on the highway. You're to Otres. You want to go to Mandeville. You know, you're moving in any direction. And if you want to deliver into Kingston, you're straight up the boulevard. So logistically, just the location of that building has proven to be a cost saving for us as well as the consolidation of the 2 warehouses and head office into one.
Oh, that makes great sense. Makes great sense. The company mentioned in their prospectus the addition of lithium-ion batteries to its product line. Can you provide an update on this?
Yes. Again, that was the first time last year we brought in lithium-ion batteries. And for those who don't know lithium-ion, it's really like these more like a Tesla wall unit. I'm not sure if anybody's familiar with that, but it's really for renewable energy, and they can be kind of kept inside. They can be mounted on a wall. It's not this, you don't have to have stacks of rows of batteries on the floor as the lead acid batteries also give off a little bit of fumes.
Right.
The lithium ion, there's nothing like that. So it's almost like a Dell server racking system with these lithium ion batteries. They're pretty expensive, but they last long. There's something like a 7 to 10 year warranty depending on the size of the battery.
Right.
So they're great for home use and business use, and kind of kept indoors for your solar or wind or any renewable energy backup system. They've been selling really well. We've sold off the first containers. It's probably over $50 to $60 million for a container.
Wow.
One container. We went through that last year. We're on our second container, and it's selling very well. And again, completely new space in the energy storage business than just a traditional legacy automotive truck and type of business. And we see this area in the lithium ion and other renewable type batteries continuing to grow for the next 10, 20 years. You know, it's just a great space to be in.
Excellent. So I can take it that you are going to be in that renewable energy storage space in some shape or form.
Absolutely, absolutely. We actually even brought in some solar panels recently, and I've been selling some solar panels through our warehouse to a couple of the solar installers here in Jamaica.
Okay, excellent. Makes sense.
Yeah.
Gary, any further question from you?
Sure, definitely. I mean, it's an exciting business, and it's going into an interesting phase. Zander mentioned earlier about, I think it's 1,000 agents. You made reference to your 6, I think, proprietary owned stores. But can you go further into this 1,000 agents, and are there opportunities to leverage that distribution?
Yes. So the one opportunity, there's 1,000 retail stores are pretty much small gas stations, large gas stations, convenience stores, auto parts stores, you know, spread across the Jamaica from, you know, anywhere on the island. So that's kind of the look and feel of it. We believe in terms of leveraging this, a lot of them not only buy batteries from us, but how we leverage them is, again, with this new product that we're bringing in, the hand-cooked tires and Laughlin tires. We leverage we can only stack probably in our trucks 2 rows, not probably, we can only stack maybe 2 rows of batteries within each truck. It then leaves a lot of space in the truck. So what we do is we can put liquid products and stuff stack on top of it, and then sell into that same distribution network of 1,000 dealers and leverage it by saying not only are they buying batteries, but we're leveraging up so now that they're buying accessories and also tires, because many of them, not all of them, but many of them have tire installation equipment and also resell tires through their auto parts stores. So that is one of the ways we're looking to continue to leverage that network of distribution channel. Yep.
Yeah, thanks for that, Xander. And what percentage of the market do you think you control in the automotive battery segment?
Our numbers, when we look at Statins importation figures, and when we do our own kind of market surveys, it's somewhere between 60 and 70%,
right.
Depending on which one you look at. But 60%, 70% market share is pretty dominant. There is no other Caribbean country where there's one brand that has 60 to 70% market share. Usually it's one or two big ones at 20, 30% each, and then another, a few other smaller ones. So we're very happy with that position, and it's not always been that position. At one point we were down at 30% market share 10, 15 years ago, and have gradually taken our time and built back up to that market share. The strategy that we use was very helpful to doing this. Is coming up with like a battery for every budget,
right.
which is a good, better, best strategy. Making sure that we have a battery priced and warranted for an economy line customer, for a medium customer, and a premium customer. And that strategy, when someone walks into the store or any of the brands, so we color code it from blue top, red to yellow top, it makes it pretty compelling to them. For whatever budget they feel like they want to spend, we have a product to suit that niche. And so that's been helpful in keeping that market share there. I don't think we can, it's hard to grow it much more than that. So we've really been looking at other countries, and again, with the money we raised in the IPO is really for expansion into other countries, strategic acquisitions, and then of course new products like these that we're adding now, the tires.
The tires, the batteries. That makes sense. And so what are some of the strategic plans in the pipeline you would say to drive the growth of the business?
Those three right there,
okay.
which is new products, new countries, and strategic acquisitions. And I would say acquisitions and partnerships. One should be announced in the next month or two.
Okay.
We have created a funnel or a pipeline of maybe 6 or 7 opportunities. And those opportunities, I wish some of them would happen quicker.
Right.
But as you know, in business, everything takes time.
Plus the pandemic's made it so difficult. I would imagine.
And you also have to try and de-risk them by doing your due diligence and making sure that what you're buying or who you're partnering with, is what you think it is. And so it has taken us some time to do that due diligence, but I think it is now starting to put a little more distinctive color around some of those opportunities that we know within the next few months we'll be announcing some of them. And we're very excited about that because they're opportunities that are going to be accretive to earnings and grow earnings, pretty much from day one. So, yeah.
That makes sense. And a lot of people don't know this. I mean, you, through your other businesses, you're already operating in at least 3 other regions, maybe more? 4 other regions?
Yep. Barbados, DomRep. And actually, one of the opportunities we're looking at for tropical batteries is in Dominican Republic.
Okay.
And a 50-50 partnership.
Cayman?
No, we're not in Cayman. We're in Turks and Caicos.
TCI?
TCI and Belize.
Okay.
So DomRep and Barbados. We just opened in Barbados during the pandemic.
This is Choco?
Yes, Choco.
Excellent.
The government put out a tender for their Harrison Cave, which is very similar to, say, the Duns River Falls of Jamaica. It's their government attraction. That's their largest attraction. And 5 or 6 people bid on it, and we won that bid last year, November. And then, of course, the pandemic kind of slowed it down, and so we're in the process of opening and really expanding that for the government, and we manage it for them, of course, for a fee and stuff. But it's going to be our first time in Barbados in some time.
Well, excellent. Sounds great. Hey, Gary, any further questions from you?
I think all the questions I have now will get Xander into trouble in terms of forward looking. But so I will hold on them now because I think expansion for this business is huge. But I'll leave it up to him.
Yep. So, I mean, obviously, Xander, there are several ways you can grow. You mentioned it. There are new products. You mentioned the tires. We talked about the lithium batteries going into the renewable energy space. But there are also acquisitions, and I think or mergers, M&A type stuff. And you're saying you are focused on trying to grow the business through these various means.
Yeah.
Have you set yourself a personal target? Like, again, so we want to be careful with the forward-looking statements, but I mean, if what's your target in terms of how you would like to grow your sales, or however you think of growing the business over the next 2 years? How do you think about that strategically? Next 2 to 3 years.
Yeah, I mean, I would like to double the size of our business in the next 2 to 3 years.
Yep.
And we have within our senior leadership team, our management team, we have a 5-year forecast, and planned out each, not just pie in the sky forecast, but actual opportunities that we think we can achieve, and which line is going to achieve that line, and how do we get to that. And it's pretty detailed, and we think we're very confident that we're going to be able to get that done. Some of them is hard to predict, which is why we create a funnel of 5 or 6 different opportunities that we're pretty sure 1 or 2 of them will materialize each year, and that will, if that happens as planned, we will probably more than double the size of the business in 3 years. Yeah, and it's just an exciting time to be in what I think is going to be a fast-growing area. Renewable energy and storage of renewable energy is now the solar plus storage is cheaper in Jamaica than buying from the grid. And it is in most countries now around the world. This was not the case 3 years ago.
Right.
Literally 3 years ago, solar plus storage, which means you can go off the grid, was not as it didn't work out. The payback didn't work out. But today, with battery costs down 90% in certain lithium-ion from 10 years ago, and solar panel costs down significantly, it's going to be a huge area of growth. And we think we are positioned with the expertise and knowledge within our team. Tropical has over 122 employees, but a lot of them have been with us 30, 40 years, literally. So have great experience, and we have young and old, and it's a great blend and mix. So we feel confident that we're in a great position to take advantage of this industry that's going to be growing above the normal rate of growth for most industries.
Yeah, no, I totally agree. And I happen to have about 16 years experience in energy myself, and I agree with you. 2, 3 years ago, it was obvious to us that the solar plus batteries have now achieved what we call grid parity, which means it's just as affordable to do it. We see a lot of folks, for instance, and I'm not saying they're going to solve for 100% of their energy needs, but most people have a generator or something, for instance, and having solar plus storage just makes good sense. And as a country, as we try to reduce our dependency on oil, and for a lot of folks, it's a good way to fix their energy costs as well too, because you make that investment one time, you finance it over 3 years, 4 years, it pays for itself, and you fix the portion of your energy costs. But storage has always been, the key to that, right? Doing the solar panels by themselves does not really make great sense because it impacts the quality of the power you have, and a lot of people don't appreciate it. As soon as you have cloud cover, that can affect the quality of the power. So you do want to do some form of storage with any meaningful solar installation, and the costs, as you said, have now come down. And if you have a great supplier providing the batteries who can give a good warranty behind it, which is what you're saying you can do, whether it's 3 years, 5 years, 7 years, I also think that's important, because there are a lot of suitcase men selling panels and and putting together solutions that after 2 years don't work.
Yeah, and then you don't recoup your investment.
Correct.
Because your investment, you're thinking it's a 10-year investment, and you're calculating your payback and everything over that. It is, again, we are perfectly positioned with the expertise to warranty it, be on the ground. If there's a problem with a battery or manufacturer problem, we can swap out a battery.
Right.
You know, we can. It may not impact the business this quarter or next quarter, but we are in this business for the long term.
Right.
We are in this business for 3, 5, 10 years down the road to build. It's the reason we took the business public, is to really build a great company that's sustainable, and take advantage, raise some money to take advantage of these opportunities that we see coming. And so it's just exciting to be have our core business that can help keep things going, and then also this new market that the core business will grow at a normal growth rate, but these new areas are going to grow much quicker, and that tied in with even looking at things like electric vehicles.
Well, I was certainly encouraged to hear that the EV business will support your business further, and it makes sense to me. Even my car uses 2 batteries. It makes good sense to me that these guys still will need auxiliary batteries.
Yeah.
Okay, so folks, I want to move on to our social questions from social media. Again, I want to remind you guys to send in your questions. I see a few rolling in already, and we're going to jump to the first one, and then after that, Gary, I'll come back to you in case Gary has a question. So first question comes in from David Mayer, who asks, how is the pricing of your batteries compared to your competitors, and how will that impact your growth going forward?
Yeah, great question. So I think that, again, that goes back to a battery for every budget.
Right.
So it depends on what range. Our economy line, I would say, is priced with some of the the best of the best on the lower economy side. Maybe we're 5 or 10% slightly above some competitors and in line with others. In our mid-range, again, we are, if you're comparing apples to apples,
right,
and that would say you're trying to buy a battery that has 700 cold cranking amps, you want to compare it to a battery that also has 700 cold cranking amps.
Right.
So both of them at 700 cold cranking amps can both fit in a Toyota pickup, but you can also buy one with 600. And so that one with 600 cranking amps has less power, less lead, and should probably not last as long if the recommended size says you should have 700. So you want to make sure you're comparing apples to apples.
Right.
Check the specs on the battery. And but when you do compare apples to apples, we're pretty much in line with most of our competitors. On our premium line, there's competitors that are above us, but in general, I would say, again, on our premium, probably maybe 5 to 10, maybe 15% above some competitors. But I think we also have a very robust warranty, center, and our customer service is such that people are willing to spend a little extra, 5 or 10%, instead of buying a competitor's product, because we stand behind that product.
Mm-hmm.
And in general, the quality is usually exceptional. Occasionally you have hiccups here and there, but in general, the quality is excellent. And I think that's kind of where we stack up. Again, you have to segment it by range, right, economy line, mid, and premium.
Right.
But we're pretty competitive with all segments of the market.
Oh, good to know.
Yeah.
Next question comes in from Peter Williams, who asks, how many batteries did Tropical Batteries sell in 2019 and 2020?
A good question. So we sold approximately 145,000 units in 2019.
This is your financial year?
Yeah, financial year, sorry. Yeah, financial year.
Not a problem.
And then I think we sold 160,000 units in 2020. So we were up
9% of my memory.
Oh yeah,
right.
yeah, about 9% in volume and about 7% in revenue, or 8% in revenue.
Right, right.
So volume was slightly up above revenue. Yeah, and I think
despite the COVID.
Despite COVID, yeah.
You had 6 months of COVID in that financial year.
Correct. Mm-hmm. Yes. Yeah. We're happy with that unit growth, especially given last year.
Sounds pretty good too.
And this year will be higher.
I'm sure it will, especially if the tourism sector starts jumping back
Yeah,
up.
jumping up. Yeah.
Mike J asks, what are your green energy product plans? What are your green energy product plans?
So yes, lithium-ion batteries, which we're currently selling, are considered green. And energy storage in general is considered clean energy,
Right.
especially because we also collect the batteries, the lead ones, and recycle and send them out. And we're also, as I said, selling solar panels currently now too.
Right.
So those are kind of those two areas right now.
And is that something you might explore more, you think?
Yes,
solar
we
panels,
want to
the solar
expand
panels?
more into all energy solutions, helping people save, and really helping this transition from, helping this transition moving to cleaner energy and providing storage capacity for people who want to make that transition to having cleaner energy instead of from oil and other type forms of energy production.
Right, makes sense. Gary, how about you? Any final question to you before I move over into our market segment and other stuff like that?
Sure. Xander, historically, you guys have manufactured, or you mentioned earlier that you still manufacture a lot of your products. How much of a competitive advantage is that in modern day when the majority of your competitors are importing?
So, yeah, good question. And when I said, just for clarity, yeah, we manufactured for probably 50 years of our 70-year history. So we don't manufacture much anymore. We asked them to build to what I call Caribbean international specifications. And we bring them, because again, the economies of scale just could not compete with the larger manufacturers globally, because we have none of the raw materials that are really needed to build a battery here in Jamaica, which we used to import lead years ago. We had a lead smelting operation here in Jamaica called Jamaica Metals. But lead is not here, so you have to import all the raw materials, then to put it into a factory. Just even though some of those batteries could even last longer than some of our ones that we bring in as well, the cost to do it was just not making sense. And that's also part of the reason when we had dropped down from, say, market share diminished, because we were priced probably 30-40% above what you could bring a battery in from Trinidad, or because of their energy costs and CARICOM, they were bringing batteries in duty-free, Autopower, and also coming in from the Far East. So at that point, we realized we had to make a switch, or we were not going to be in business for much longer. So yeah, so we do, I agree with you, we don't, it didn't make sense to manufacture past the point, because we just don't have the raw materials here.
Great, thanks for that question, Gary. I'd like to congratulate our winners from Instagram in relation to today's giveaways, courtesy of Tropical Battery, and they are JC Knight 40 for all _sneaks and Ricardo.Morrison. So congratulations, guys. Okay, now I'd like to move into our market segment. To go through our top stock picks, and so I think the top pick we have today is Carreras, and we're going to have them on in about 2 weeks' time if my memory serves me right. So what I like about Carreras is if you look at the stock price, how that's traded over the last 3 years, you can see that this is a stock that's coming down from about $10, in fact, as high as $12 4 years ago. My average holding of Carreras is $12, believe it or not. And it's traded down quite a bit, ran at a low of $6, and they've had some recovery in the last 2-3 months, up to now in the region of about $8.82, but this is still a stock that has lots of legs. Current PE ratio, 11.48 times, again in a main market where the average is 17 times, so it does trade a little bit below the main market average in general, but this is 60% below, guys, so I think the stock is undervalued by at least 30%. It's a company that makes $3.3 to $3.7 billion a year in their sleep And although I agree earnings have been flat in that space, roughly $3.3 to $3.7 billion per year for the last 3 years, it's a company that has no debt, pays out practically 100% of their profits in the form of dividends, and is one of only, I would say, 2 or 3 what I call sin stocks left on the market, stocks where people buy them no matter what's going on with COVID. They're going to smoke, they're going to drink, they're going to gamble. So I like it a lot. Moving on to the next slide, just to look at some of the numbers a little bit more again. Company has $2 billion in equity, has an earnings per share of about 53 cents, is, like I said, traditionally turning a profit before taxes of $3.3 to $3.7 billion in their sleep, roughly $2.5 billion per year after taxes, and they dividend out all of that money. Again, no debt, not doing any manufacturing anymore. They're basically just importing the premium brands and selling it. They have some challenges with the illicit cigarette trade, and we'll talk a little bit more about that in 2 weeks' time. But for the most part, look at this in the pandemic. Sales were flat, $10.1 billion. I don't think that's anything to complain about. Now, on the last slide here, we look at the profit by quarters. And what you can see is, throughout the pandemic, they basically had a challenge only in their first quarter. And since then, they've been sort of ramping up. So last trend, look at the trend in the last 3 quarters, profitability growing from $650 to $910 to $1 billion per quarter. So it's a great stock, and it's my pick for this week. Gary, any comments on Carreras before I move to my gainers and decliners for the week?
Well, it's one of the stocks I love because of the high dividend yield. And, there's certain stocks that you should always have in your portfolio if you're in the Jamaican stock market. Carreras is one of them. One of the beauties is that Carreras always pays you a very, very good dividend, and it jumps in a particular space. So it might trade flat for 2 or 3 years, and then it gives you a 20-30% capital appreciation. And so when you have a stock that pays such high dividends, and then over time you're going to get another 20-30% in cap gains, oh my God, sweet.
Yeah, I like it. I like it. If you bought this stock 2 months ago at $7, you would have locked in a dividend yield for yourself of about 9% and then picked up a 20% gain. It's hard to do that. I think the only other stock that's going to give you a high dividend yield and future capital growth is the one you represent, Gary, SVL.
Oh, boy, you heard it here.
Good deal. All right, moving on to our decliners for the week. Top 5 decliners, we have South down by 5%, Jetcon down by 6.6%, Cab Brokers down by 6%, Lasem down by 5.5%, expect that to reverse next week, I'm sure, and Siboney down by 5%. Moving on to our top gainers for the week, we have Access up 16%, Purity up 15%, Cargo Handlers up 15%, Trans Jamaica up 15%, and Cygnus USD up 6.36% as well too. Okay, great. We like to look at the US dollar in our market segment, and this gives you sort of, again, the 4-year trend on what's happened with the exchange rate. That's working out to be about an annual devaluation rate of about 2.7% per annum if you start at 128 and end up at 142.65. And then next slide, we show the year-to-date devaluation, which has been about 3.15%. And we started the year at 142.65. We're now at 147.14. On the next slide, you'll see that it hasn't been linear. In fact, we've been doing a bit of a boat ride. It trades within a particular band. We've had a high of 152.44, as a matter of fact, year to date, and then it's revalued back to as low as 145. Now we're in the region of 147. So in general, we kind of expect this band of trading over the next couple of months, 2, 3, 4 months. Most of the folks think the tourism is going to start to pick up pretty strong in June, July period. So it'll be pretty interesting to see what happens to the exchange rate after the tourism kicks in June, July. Hey, Gary, what are your thoughts or expectations in relation to exchange rate
Well,
movement?
as I indicated 2 weeks ago, I thought that with the liquidity constraints given the tax season, you'd have seen the dollar trade a little bit lower, which we saw. So the dollar, I think, plateaued at about 145, 145.50. What we're now seeing is that I think they're going to test back that 152 high. So I believe today on the margin, the dollar trading in excess of $150. So I think we've seen that sharp reversal. As you are aware, Dan, one of the things I pointed out in our previous program, one of the indicators I think people should look for is when the central bank comes out and indicates that it's okay for the banks to start paying dividends again, which they have done over the last 2 days. So on one hand, it's positive that, they think that the system has come back and is a bit more robust, that, it can withstand the payment of dividends for these institutions. The issue is, the process of converting all of that unpaid dividends into US, we don't know whether they've done it, whether they've converted it and put it out in the US or they need to convert it. No. Either way, I think it's going to create a little stress on the US dollars, and I wouldn't be surprised if we touch back the previous highs that you spoke about, even for a relatively short space of time. And on the other hand, I mean, you've seen where the central bank has given cause for concern about the level of non-performing. So I think we have to balance those things, but on the balance, I think we're going to look at a dollar that's going to be appreciating a little bit above 150, but let's see how the next couple of weeks play out.
Thanks. I appreciate that. Appreciate that. Well, it's been a great program. Xander, we ran out of time. I told you the hour would go by pretty quickly. How do you feel about FX? You're in the tourism space. I mean, do you expect flows to come strong this summer?
You guys are the experts, but
flows, just flows.
Yeah, I think there's definitely flows are going to pick up. I think from tourism, but I also agree with Gary. It's going to be tight. It's going to be tight. Oil prices are up. That's also a big drag on U.S. dollars. So between that and tourism still not being full 100%, but still better than last year this time.
But the worst is definitely behind us.
Yes, I believe the worst is behind us, but I do believe we'll head back up to that 150, sometime in the middle of this quarter, probably.
I suspect so. Well, folks, it was a great program today. Really appreciate it. Xander, it was great having you. Gary, thanks so much for giving us all of those insights. To our viewers, thank you all for being a part of our weekly Investor Forum. I'd like to thank our special guest, again formally Xander Melville, for his participation in today's investor briefing. We're currently looking forward to having yet another insightful discussion in the coming week when we'll be featuring Mr. Beresford Gray, Group CEO of Cygnus. Be sure to follow us on social media and to stay up to date with our live streams. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you to all our viewers for tuning in today. Keep safe, and remember, wise investors, slow and steady wins the race. Thanks, everyone. Bye-bye.